Today, the stock market fought back some intraday volatility to close higher on the day, and we're starting the week off with a bullish start. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.36%, and intraday we did test the breakout of support at 411, and we bounced all the way back up to our critical resistance at 414. So as I always say, trade the price action and the trend, and right now we have a bull trend with bullish price action with the price above all the moving averages. And go back to April 12th where we had that positively sloping 20 moving average crossing over the positively sloping 50 EMA, and we now have the full bull trend with all of our moving averages positively sloping and stacked to the bullish direction. So this bull trend is only gaining momentum. However, we need price to break 414. I talked about in the weekend video why we are likely going higher. However, we need the price action to prove it by breaking through this critical resistance. Once we break 414, it is going to be a short squeeze up to about 417, and then above that we go to the gap fill at 421, and I still think there is a very good chance we're going to see the August highs, but we need to see the price action agreeing with me because my opinion is useless. Remember, the market doesn't care what you think, and the market doesn't care what I think. So you need to follow what the price and the trend are telling you. If you ignore the chart, you might as well not trade the chart because the price in the chart is the only thing that is going to pay you. So right now we're getting a lot more bullish above 414, and we're not getting bearish until we break all the way down below critical support levels, which is going to be 411 and 407. Like I always say, make the price action prove it, and right now the price action and the trend are bullish. On the NASDAQ 100 triple Qs, we were up 0.08% today, and intraday we did bounce off of the 13 EMA, and we did close back over all the moving averages yet again, so we still have the bullish price action above all the moving averages and the bull trend. In the triple Qs, our next likely price target is going to be the gap close at 322 and our double bottom price target up there at 327, as long as price action holds this bull trend and stays above critical support. Our critical support level in the triple Qs is down here between 311 and 312 because that's the daily higher high breakout, and that's now going to be support. You can also see the daily chart does look like it's bull flagging and consolidating through time while it holds on to the bull trend, and we did get that positive bounce off of the rising 20 daily moving average. So there's nothing on this chart that says we're going lower. It actually says just the opposite. So wait until we lose critical support before you think the market's going to roll over and die. Don't bother trying to predict it. Let the price action prove it. And right now the price action is telling us we're going higher. On the Dow Jones, we were up 0.32% today, and the Dow Jones closed above all the moving averages yet again. So we simply need to break this high just above 340, and we should be well on our way towards 343 and then 346. Critical support in the Dow is down here right around 334. And if we break that support, then you can get more bearish because we're likely going down to close the gap at 329. Also note that rising 20 daily moving average is getting very close to crossing back over the 50 EMA, so we're going to have the full bull trend. On the Russell 2000 IWM ETF, we were the strongest in the small caps today, going up 1.29% and breaking that high at 178.5. So the next resistance is going to be just above at the 50 EMA and the gap close of resistance at 181.28. That's critical resistance because if we break through that, we're likely getting the bull breakout, and then we'll have the higher low into the higher high as we start to race to higher prices. Critical downside support remains 176, and then down here at the previous daily low at 173, and then below that look for the gap fill at 172 and critical support at 170. On the ARKK ETF, we were up 0.46% today as ARKK is starting to build out a wedge between 40 and down here at this critical support at 37. So we are likely going to see the breakout direction in the very near future. We're not bullish until we get above 40.5 because of the double triple top look, and we're instantly getting bearish if we break the neckline at 37 and 36 for the gap fill down there below 32. On the VIX, we were down 0.76% today as the VIX makes yet again another daily lower low, and we are now having the VIX trading below 17. I continue to tell you this is bull market behavior because you're not going to see a VIX this low in a bear market because there's simply more fear, and this is telling us fear continues to leave the market. On Bitcoin, we're currently down nearly 3%, sitting right on top of that price target that we broke right through, and now we're coming back to test it as support at 29,400. We also have the rising 20 daily moving average and the breakout zone of support at 28,000. So if you're bullish on Bitcoin, this is going to be a risk level. If we break through that support, we're likely coming back down towards 27,000. The next upside price target, if we get the bounce, is going to be 31,800. On Google stock, we gapped down today and we closed down 2.66% for the day, and we bounced right off of the rising 20 daily moving average, and we now have a gap to fill to the upside just below 107, which I do expect that gap to fill very quickly. If we get a strong bounce off of the rising 20 daily moving average, look for us to reach that price target at 110 before earnings. Critical downside support will be right here at 104 and then down here right around 102. On Amazon stock, we were up 0.22% today, and Amazon is holding that bull breakout above 102, so we simply need to break the resistance now at 104, and we should start running towards my price targets at 109 and 115. Critical support is 102 and 100, and if we break below that, look for a retest of 98. But if we can't hold above 100 or 102, I'm not so sure we're going to hold above 98, so manage your risk up here right around 100. On Microsoft stock, we were up 0.93% today, and Microsoft is still finding resistance right here at 290, which is the level we need to break to get to the next target higher at 296. A strong rejection from 290 could take us back down towards 283, the gap fill at 281, and the gap fill at 276. But do keep in mind we have the rising 20 daily moving average also at support at 283. On Nvidia stock, we're up 0.91% today as this stock continues to burn the bears who are trying to call it top because we cannot break down through this support right around 267. We had that false breakdown, but we're right back above the rising 20 daily moving average. So this is a stock you need to be very cautious trying to short. And looking at the Bollinger Bands, you can see we're so squeezed, there's not even a lot of downside anyway. The bottom of the Bollinger Band is around that support at 258, but you need to wait for the break of support at 267 or the more critical support that's starting to build up around 262. On Tesla stock, we're up 1.1% as Tesla is trying to continue to hold this support right around 183, and it is doing so successfully, but it is starting to look like a bear flag the longer we continue to find resistance at that 20 daily moving average at 190. For that reason, I would not get bullish on Tesla until it can at least break 190 or 197. Otherwise, you are likely going to get bull trapped if we continue lower towards this gap fill at 146 or at least a retest of the lower support at 173 to 167. If we break 190, that's a different ball game and you can start getting more bullish because we'll start to develop a bull trend. On Apple stock, we were up 0.01% today, so we went absolutely nowhere, but the price action is still closing above all the moving averages with the bull trend, and we're trying to get this bull breakout above the resistance trend line right around 165. From here, we could go reach 169 and that gap fill at 171, and I do think there's a very good chance that's exactly where we're going before earnings. Manage your risk at support at 163, the rising 20 daily moving average at 162, and the previous daily low at 160. On the financials, we're up 1.16% today, coming right into that resistance around 33, and this is exactly where we're going to be looking for critical resistance. Otherwise, we are likely going back into a bull trend. Above that, we can get back over the 200 daily moving average, but a rejection from here does take us to fill some gaps to the downside. The industrials are up 0.79% today with price action above all the moving averages yet again as we continue to develop a bull trend. We need to break this previous daily high at 101.5. The healthcare sector was down 0.08% today with price action above all the moving averages, and we're very close to having the bull trend, so stay bullish as long as we're above this breakout zone at 134. The energy sector was down 1.18% today, closing back down below the 5 EMA, but building up a bull trend the longer we can hold above this gap zone right around 83 to 84. So jumping back over to the S&P 500, without a doubt, we are at very critical resistance. So do be cautious of that because you never want to get bullish at critical resistance. Wait for it to break, turn into support, and then manage your risk from that newfound support. If you're bearish on this market, you're still going against the trend and you're taking a lot of unnecessary risk. So you also need to manage your risk right here at resistance at 414 and get a lot more cautious if price action breaks through it. Remember, if we start to break above 414, it is going to look like a new bull market, even though a lot of people don't think that's possible. The stock market couldn't care less what they think. It's going to do what it wants to do. So follow the chart, follow the price, and stick in the direction of the trend, and you're going to have a much simpler time trading this market. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join the Stocks Channel Trading Discord community. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that will send you all of your buy and sell alerts directly via email and text message and only trades the ETS, TQQQ, and SQQQ. You can find out how to join the stocks channel Discord or bank trade alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.